Hello, this is the daily Forex report for November 1st. We are looking at the US-Japanese yen pair. This particular pair closed down on Friday, did create an inside bar. Definitely look for the breakout on this one. We are looking for this pair to potentially go as high as 84.01, possibly as low as 82.68. Look for some resistance around 83.75 and look for some support around 83.00. Now looking at the Euro-USD, this pair moved to the upside on Friday, gapped a significant amount, about 33 pips at the open. We are looking for that to retrace. Look for it to potentially go as high as 138.65, possibly as low as 135.35. Look for some resistance around 138.25 and look for some support around 13600. Excuse me. Now the pound US dollar pair. This pair closed down on Friday. It did gap a little bit. It's already retraced that gap. We are looking for this pair overall to be moving sideways, bias sideways. Look for it to potentially go as high as 161.72, possibly down to 158.32. Look for some resistance around 160.95 and look for some support around 185.85. I'm sorry, 1.5885. Now the US Swiss, this pair closed down on Friday. It did have basically tagged the same high, but did close down. We are looking for it to continue moving sideways, possibly going as high as 1.0055, possibly down to 0.9814. Look for some resistance around 0.9995 and look for some support around 0.9850. Okay, now as far as news announcements go, we don't have any significant news announcements being released during tomorrow's session. However, let's go through kind of what I'm looking for. I get a lot of emails asking me about Forex Trading Signals, and just want to show you a way you can generate kind of your own signals by using Fibonacci. Now we're going to use Fibonacci retracement. I've used these before. Fibonacci retracement, go from the low to the high after you have a series of runs in one direction or the other. Then we're going to use our Fibonacci Fan, and you basically take it around the same area. And now what we're doing is looking for, and let me there we go. Now what you're looking for is this box right here. The 23.6 down to the 38.2 over and then up the 38.2 fan, and this is the 50 fan. And what we're looking for is a drop down to this point, look to go short and then come on down. The interesting thing about this is as time goes out further, once a trade is triggered, you can see this line, the 50 line, comes up. So basically what it does is it helps to get you out. If it triggers a trade and then the market just moves sideways, eventually you will get out of that trade as this line comes higher and higher, the 50 mark. Okay, let's take a look at another pair. This one may have already broken through, especially with the gap. And we use the fan. Okay, this one broke through, it looks like on Thursday. Have a break right here, and it did move up and tag right there. So you can see how that the 50 line moving down basically got you out of the trade. If it doesn't hit the 50 line, you're going to exit at the 38.2 level. So that'd been a move of 64 pips. Let's take a look at the pound. It's been moving up and down. It's kind of sideways overall. Let's take a look at the US Swiss. This one's moved sideways for a good while, or moved higher for a good while, and now is moving sideways. We could get a drop to the downside. Just have to wait and see. So you use your Fibonacci retracement and then your Fibonacci fan, and you look for basically the break here of your 23.6 retracement level and your 38.2 retracement level. And for the fan, you use your 38.2 and your 50 line. We're looking for a break. So this one definitely could occur during this next session. Come on down, and at that point, exit at a profit. Just to kind of show you what that looked like from a pip standpoint, that would be roughly about a 66 pip move right now. Well, that about wraps us up for today. Until next time, this is Jason Fielder. Good trading.